So as far as the next part, are operating expenses negotiable? Yes and no, right? Couple of things that from experience where you won't get any budge on is, hey, I don't want to pay taxes, property taxes, or insurance. Those things for a landlord are just kind of like they'll just go over their head and or in one ear and out the other because they have no control over their property taxes. They have no control over how much insurance is going to cost or anything like that. So what you kind of look at is what are some of the controllable expenses, and that's where you kind of get into the nitty gritty, and that's going to be in your CAM area, right? The common area expenses, things like that, to some degree that you can, you know, make the landlord when you're negotiating to be more resourceful, be more prudent, be more efficient on how they're managing the building. So that can be from what we like to do is uh, negotiating operating expense caps on escalations is typically your most common way of doing it. So you got your year-to-year caps, which can be cumulative, non-cumulative, um, cumulative compounding, as you would say. Um, So basically, if you do the year-to-year cap, some people can stagger. So 1 year is 3 years, 2 years. I mean, not 2 years. 3%, 2%, or 2%, 3%, 4%. As it staggers, um, it then what that does is just allow you to keep it keep your cam increases, keep your cam expenses to more of a predictable level. Sometimes you can just have it flat, okay, over the entire period, no more than 4%. Um, Now, what a lot of times they'll push for, and I've seen it a lot in a lot of leases when we're doing a occupancy review or for a client, just to figure out, what should be their strategy going forward. Um, because a lot of people don't look at their leases. They don't look at it basically when they sign it, then it's put in a drawer or left on the file on their computer, and they don't look at it again. But we kind of do a review, make sure everything is on the up and up. They're paying what they're supposed to be paying. Then we're figuring out a strategy. What should we do going forward based on what they're seeing for their business? But what a lot of times we'll see in there is this cumulative compounding cap, right? So what this basically is say for instance, you had a 3%. You negotiate in there for a 3% cumulative compounding cap, right? So that first year, um, CAM only increased 2%, so it's still under the 3%, right? So you're responsible for paying this 2%. However, because it didn't reach the threshold of three, you have that 1% difference. Now your CAM cap, because it's cumulative compounding, basically it's any unused portion that doesn't hit that cap number gets carried over or added onto it rather, to the next year. So what will happen is, like I said in this example, your cumulative cap is at 3%. That first year is your CAM was increase was only 2%. So you got that 1% left. So then what happens is that 1% for the following year of your cumulative cap now is 4%. And so let's say again, now the increases again were only again, let's say 3%. Then that's again that three minus, I mean that difference between 4% and 3%, you still got 1% left over. And what this does is increase the cap again. So now you're at 5%. And like I said, a lot of landlords um, prefer this route. Um, we, on the other hand, especially depending on what kind of business, especially if you're a nonprofit, um, you're a small business that's gradually growing, and you don't quite have a good handle on where your estimation of revenues and things like that. So you need a little bit more predictability in there. We definitely kind of go after getting um, non-compounding caps if we can't get the uh, what's by non-cumulative, non-compounding, basically caps. Um, so that way you have kind of a threshold and understanding where you are. And like I said, we try to keep it the same throughout the entire term that you have. So no more than 5%. And anything over that, the landlord is responsible for the increase. So, like I said, hopefully this is a little bit more clarity, a little bit more beneficial, especially if you're looking at going out there signing a lease on your own. But as we always say, we always recommend having somebody on your side that's representing your best interests, walk you through it, give you explanations, and use their experience to help you kind of navigate expenses. Because, like I said, when you're running your business, you're running your business off of numbers. And if you're a startup, you're a small business, you're a nonprofit, you're gradually growing, um, having a more predictable expense, so you can kind of calculate where your profit and your net income on your business will definitely be beneficial. Thank you for tuning in to another episode of the Level Playing Field Procast. You can follow us, or actually follow me, on Twitter at Dominic Green CRE. Search us on LinkedIn and Facebook. Just type in the word ATENANTco. Or you can go to my personal profile on LinkedIn at Dominic Green Tenant Rep Advisor. For more information about us, go to our website at www.atenanco.com. And for immediate assistance, you can give us a call at 214-247-6211. And until next time, happy leasing, everyone.